Hello, Mr. Mac, Riviera Cash Flow Show. How we doing? Great. Friday afternoon. I wanted to talk about a couple items under asset management for today. One of them being property tax and property tax appeals, sometimes also known as ad valorem tax. We've been in the business for a while, and in every market you have to be able to find ways to increase income. And so for a while in our market, we as a broker, real estate broker, we provided a service to clients where we would review their property tax assessments. In Florida, the property appraiser's office is tasked with assessing every individual parcel of property, commercial, residential, land, whatever, and putting a value on it in accordance with the state statute. The value is supposed to be derived as of January 1st that year, and it is supposed to be based on an arm's length transaction. If a sale were to occur, no financing, no special conditions, all cash in the current condition that it's in, as is, and that's what they're supposed to value the parcel as. So if you ever looked at your property appraisal trim notice, it'll have on there the assessed value, and they take that assessed value, and the municipality where you're located, the county, the city, what have you, determines your millage rate for the year, and your millage rate is multiplied times your assessed value, and that's how they come up with the amount of tax, ad valorem tax. And so the tax can be, or it does have different taxing authorities. You might live in a place where you've got county tax, city tax, maybe a fire service, maybe trash and refuse. In Florida, about half the tax is going to be for the school system. So your millage rate will basically depend on which taxing district your property falls into. So obviously, if you're in the county and not located in the city, you're not paying the city tax, but you are paying school board, county, maybe fire, especially if you're in a rural location. So if you take out your trim notice, which stands TRIM, stands for Truth in Millage, it's got a breakdown of all the different taxing authorities and taxing districts your parcel is located in, and you can kind of go through, and each taxing district assigns a millage rate, and that millage rate changes every year, but that's not up to you, that's up to them. The property appraisal, or the appraised value of your property, is your county's property appraiser's opinion. And just in one county that we operate in, Okaloosa County, Florida, up in the Panhandle, it's not a real big place. It's only about 350,000 people, but it's like 65,000 individual parcels of land. So how, you ask yourself, how can an appraiser appraise 65,000 parcels as of January 1st every year? Well, the answer is they can't, and they don't. use a mass appraisal system, not an individual appraisal system. So they look at different property types and basically apply a formula for that property type to your property, because your property is in that property type. Property type meaning, commercial, store, house, vacant land, vacant commercial land, industrial land, industrial building. So there's about 40 different types, right? Farmland, so there's a bunch of different types, but they take each type, and if your property type, is appraised under one formula, all the property types all the properties under that property type are appraised using that same formula. So the system is inherently wrong, because they don't have the time or the manpower or woman power to physically look at every individual property every year. And they say that. They tell you that. They say, yeah, we get around to each individual property about every 3 to 5 years, depending on our staffing and whatever else we got going on. So obviously the system is ripe for inaccuracies and error. So if you bring somebody like us in as a consultant, and we take a look at your property, we want to determine what property type it is, what the formula the county is using to come up with your valuation. And more often than not, I'd say probably 60% of the time, we either find that there's inequality against, meaning your property is a lesser property than another property that's basically being appraised for the same thing, or there's actual material errors in the property data. So your parcel has a property appraiser card, and it's got all the data about your property. So square footage of the land, what kind of improvements, what kind of building, when it was built, how big it is, all this different stuff, all this different data. And if you go through that data and verify it, like I said, about 60% of the time there's mistakes. And the mistakes can be, little, can also be big. For an example, we did a medical office building in Destin one year, and it's a 20,000 square foot building. One of the items we found was the parking lot. It has an extra feature listed on there as asphalt parking lot. Well, the asphalt parking lot listed on the tax card was like 325,000 square feet. 325,000 square feet. The building sat on less than an acre of land, or about an acre of land. The parking lot was actually 32,000 square feet, not 320,000. But for the last 10 years, this poor guy, well, he was a surgeon, so he's a wealthy guy, but this wealthy guy was paying more than his fair share of ad valorem taxes because the tax card was wrong. Information on the tax card was wrong. He did not have 325,000 square feet of parking lot. Unfortunately, you can't go back in time on an error and say, well, you guys overcharged me, give me the money back. They don't see it that way. But we did point that out to the property appraiser's office. They corrected it. He paid less tax that year than he had paid in prior years, even though the value of the property had increased. Once we corrected the error, he ended up paying less tax. And so basically our agreement with him is, hey, if we reduce your tax liability, then we get a cut of that for the first year, maybe half of whatever we save you, and the next year you still get the benefit of that same reduction, but we don't get anything. So it works out. I mean, it's pretty fair way to do it. So basically we work on commission. So the more mistakes and the more money we save you, the more money we make. And that's how most property tax consultants work it. So anyway, as a property owner, you can do this with a house that you live in, or commercial property that you own. Go through your tax cards, make sure your information is correct. They don't do it on purpose, but like I said, they're doing so many every year that mistakes happen, and all you got to do really is fill out a few forms, point out the mistake. There's some other tricks of the trade that I'm not going to go into right now that can help reduce your property tax. But start off with the basics, right? Start off with, hey, are all my numbers right? Is the square footage right? Go measure that. Go make sure that it's right, because why pay tax for something that you don't have? Doesn't make any sense at all. And it happens quite a bit. So that's the tip for today. Mr. Mac, Riviera Cash Flow Show. Stay healthy, my friends.